Hello traders, Day Trader Matt here with businesswithtrading.com, doing a trading strategy recap for Tuesday the 17th of February. Hope everybody had a great long holiday weekend, and today was a really good day back. Today we ended up in the E-mini trading room 4 trades and pulled out 8.5 points. So it was a very nice day today. Our first trade happened a couple minutes off the open. It was a short right up here. It's a very nice trade, and we were able to write that down and eventually take profits down here. We basically shorted at 1/4, flattened at 8/4, and then the market came back down a little more. That's usually a pretty much a given. I always talk about I'm not a big bottom picker, top picker. I like to get in when I see a nice setup and try to make as much money as I can. I don't try to call the top or the bottom. Like we exited up here and price came down another 2 points. Price came down another 2 points from there. And it is what it is. I don't really care about that. I want to get in, I want to make money, and that's what I'm concerned about, is making money. And making consistent money is what I would prefer. And so far I've been able to do that. Make consistent profits in the market. And it's all based upon what I look for. I don't try to top tick or bottom tick or try to trade to impress other people. I trade to impress myself, basically. And that's really what trading should be about. But anyway, our next trade, we kind of watched the market chop around a little bit. We got long over here, and we were able to ride that up and take profits up here. Of course, the market chopped around a little bit and went a little bit higher. And as price came down here, we did get long right here. And we ended up, because we got long right here, we ended up taking profit up here. Price chopped around a little more. We kind of watched things. Price sold off here, and we got long right here. And we were able to take partial up here, and as price started coming down, we ended up just getting out with a little profit there. So it is what it is. We were able to make 8.5 points on 4 trades, so it was a very good day. And like I was talking about when we opened the discussion, I look for high probability areas that I can get in and have a good shot at making money. That's what makes them a high probability area, is being able to say, if I get in this trade, more times than not I'm going to end up making money. That's what we do as traders. If you play poker at all, I'm a big Texas Hold'em poker fan, and a lot of my friends hate playing with me because I'm good at making money. And it's the same thing. You're playing the odds, you're playing the probability, you're playing numbers. But you don't get that. Some traders twist that into thinking, oh, you have to be a mathematician, you have to be able to do this and do that. No, you don't. You have to have a strategy that statistically is going to provide a profit over time. But after you figure that out, you don't have to do any number crunching at all. You see a setup, you take it. See a setup, you take it. That's all. It's easy. Like literally a baby could do it. The reason that a baby doesn't do it is that that baby doesn't have its rational thinking ability. And they're very emotional beings, very emotional creatures. Like teenagers are very emotional creatures. Um, Pregnant women are very emotional, because they're pregnant. Teenagers. They just have a lot of hormones going through their bodies. It's a fact. So as traders, we have to look at all of those factors. Once you find a good setup, you can take it. Now, I wanted to talk about our swing trade room today. Um, a lot of traders hate missing a trade more than they hate actually losing money on a trade, which is kind of weird, but it's statistically valid. We were looking to short live cattle up here today. I put in in the swing trade room last night, yesterday evening around 5 o'clock. I said I want to short live cattle up here. Well, you see, live cattle never got up here, but it did come down to our first target and a little bit lower. What does that mean? Well, it means we didn't get filled on the trade, so we're going to pull the order. When I talk to the group later on tonight, I'm going to be like, hey, we're going to pull the order and not trade this one. It is what it is. Some trades you're not going to get filled on, and those trades that you don't get filled on, you're not going to make any money on. But it doesn't matter. Did you lose any money? No. Did you lose any time? Yeah, about 10 seconds, because I had to put the order in. And I guess the analysis period took me about a couple minutes. Because my method, I look at things, it's either good or not, and then I move on. I don't really care about anything else. I don't look at like 500 different time frames and 13 different indicators. That's bullshit. It really is. And you don't have to use all of that. So let's look at a trade that we actually did get into. Corn. We were able to short corn. The entry actually got triggered right here. We took about a point of heat and then came right down to target. That's a good trade. Let's look at a trade we've been in for a while. And let's pull this up in soybeans. Soybeans, we got in actually quite a few days ago at 968, and today it closed at 1,850. And I even talked about it then. I think price was around 970. I talked about it going over 1,000, and today it went over 1,000. Which was right about noontime, almost around 1, and it just kept going. It was very, very nice. And it's just one of those things, you kind of have to look at. Let's look at an option trade that we actually took today. Johnson & Johnson. We jumped into this one today, and we're actually looking for it to go a little bit higher. I don't have any markings on the chart here, so you're just going to have to go with me. But we're looking for at least 101, 100.8, 101 on here. But from there, 99.5 really should be support, and this thing should be going much, much, much higher. So we have targets around 105. Before this month is even out. So we like to look at stuff like that. Because if we can find a high probability entry, we jump on it. That's what we do. Some trades we don't get filled on, some trades we do get filled on. And the idea, the whole concept behind our trading methodology is that the ones we do get filled on are the ones that we make most of our money on. Makes sense? And the way we do that, and you've probably seen a lot if you've been watching me for any length of time, is that we look for a massive amount of reward to what we're risking. Last week I did the top 3 trades of the week. One of them was a student's trade. He made 14.2 times on what he risked on the trade. The 2 trades that I showed, that it was one personal trade that I did, I think it was maybe like 7 times what I risked, and then a trade that we did in the swing trade group together. It was, I think it might have been about 9 times our risk. But anything over 3 is awesome. Over 5 is just phenomenal. And like 14 times your risk, that's just totally impressive. That's why I highlighted it. It was a student trade, and it's just awesome, to see that. This guy learned the methodology, learned the strategy, and just knocking it out of the park. It's just awesome to watch. So anyway, hopefully you enjoyed the video. If you have any comments, you can definitely leave them below. Any question is a good question. There's no such thing as a dumb question. I totally believe that. If you want to email me directly, you can do that too. support@abusinesswithtrading.com. I'm still looking for a few more students to, finish this year, and we can just, go strong. If you're interested in that, you can definitely email me. I can talk a little bit, give you a questionnaire, figure out if it's right for you or not. And with that, thanks for watching. Have a great rest of your day, and I'll see you back here in the markets. Thank you.